What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our jobs report. A very, very important report that comes out in about 20 minutes. So at 8:30 a.m. Eastern, we're going to get the unemployment numbers. Pre-market, we are back and forth a little bit. We've got SoFi up over 39 basis points. Nvidia is back over 157.45. 12 basis points. Hims and hers essentially flat. We got Tesla also flat. So we are seeing the markets not moving as much. QQQs are up over 20 basis points, and SPY is hitting yet another new record high at well over $621, 19 basis points higher on the day so far pre-market. So thank you so much for joining, everyone. If you guys can hear me and see me, if the audio video is good, just give me a thumbs up. And as I said, we are going to get the very important non-farm payrolls report, the unemployment report, in about 20 minutes or so. So the next employment situation for June 2025 is scheduled to be released on July 3rd, which is today at 8:30 a.m. Eastern, which is in 20 minutes. So, super important report for the market, and it's going to give us a little bit more insight into where we are with the current labor market in the US as well. So if you come over to this spreadsheet, which I have broken down in my previous videos, you'll notice that the JOLTS numbers came in incredibly strong at 7.79 million. So that was the number, 7.769 million. So I'm going to plug that number in, 7.769. So we actually are seeing this number increase. This is the ratio of job openings to unemployed persons, which is now sitting at well over 1.07. So JOLTS is the job openings. And of course, the unemployed persons is also something that we are focused on. So we'll see how many civilians are unemployed over in the US as of June 2025, and then we'll plug those numbers in to better understand the situation. So non-farm payroll is expected at 110,000 for the month of June, with unemployment rate expected to tick higher at 4.3%, with private payrolls also at 100,000, with manufacturing payrolls expected to decline by about 1,000 people as well. So perfect. Good morning, everyone. Good morning. Good morning. Thank you so much for joining. Lots of thumbs ups. I see that means the audio video is good. And I say non-farm payroll comes in at 100,000. So yeah, 100,000 is going to be slightly below consensus expectations, but I think it's still going to be a pretty decent number. And we're also going to get the other items, which is initial claims, that also comes out at 8:30 a.m. Eastern. So it's not just the non-farm payrolls, but we also have the jobless claims. We have the PMI, that's the manufacturing index, composite final numbers, factory orders, ISM services index, and then a few other announcements on auctions. And the Fed's balance sheet comes out at 4:30 p.m. as well. Also, a quick reminder that we are going to close the markets early today at 1 p.m. Eastern. So it's going to be a very, very short trading session. It's going to be 1 p.m. Eastern is when the markets are going to close. So once again, a happy 4th of July to everyone. Happy Independence Day to everybody in the US, to all Americans, of course. And tomorrow is the big day, right? So markets are going to be closed, and the markets are going to close early today at 1 p.m. Eastern. So all the options are going to settle and expire today. Definitely have a lot of options to take care of. So I may not be live all the way through till market open because I'm going to have to jump into Discord to share updates and alerts over there as well. But yeah, if you have any questions, let me know. More than happy to answer, more than happy to help, more than happy to go over anything that specifically you want to ask. And then we're looking into some other positions, like Oscar is gaining a lot of attention in our community. So this is something that I'm watching very carefully. I did some simple technical analysis with the market bias as well as the Fibonacci levels. And of course, the fact that it's down so much, over 18% yesterday, pretty brutal sell-off, and support level that I'm really watching. I was thinking about selling 1550 puts on Oscar. So that is going to be a potential CSP that I might open up depending on the premiums, because premiums I checked out pre-market was 50 cents for Oscar. So 1550, it's 50 cents. But that, again, is going to change so much because pre-market, it is higher. It's up almost 3%. So that is most likely going to go down as soon as the market's open, because we're now back over $17 for Oscar. So yeah, looking into this, I've got a lot of HIMS. I've got HIMS calls 49.50 that I believe are going to expire today. Let me just double check and give you the most up-to-date information. So 1 second, and yep, portfolio is at an all-time high, by the way, hitting a new all-time high. And I've got the HIMS calls for 7-Eleven. So actually, that's next Friday. I've got the HIMS puts for today, $46, which I don't think HIMS is going to get down to. So this contract is most likely going to expire worthless, but we'll see what happens over the course of next, 4 hours worth of trading? 10, 11, 12, 1, so 3 hours, 3.5 hours worth of trading. And then other than that, I don't think I have anything else. I've got the TSLL puts that are up 70% right now. So that is another thing that I'll close out today. TSLL, 11.67. So my strike's at $11. We'll most likely close this one out for a decent profit as well. The portfolio will get cleaned up a little bit today because I'm going to be closing out 1, 2. I'll see what I'm going to do with the calls on HIMS and then with the NVIDIA calls as well, 160. That's for July 18th. So it's a couple weeks out. So, and then of course, BITX. I opened up a brand new position in BITX in the options portfolio yesterday. So we'll see how that does. And of course, as soon as the capital gets freed up, I'm going to be looking into Oscar Health as a potential opportunity as well. Okay, we are about 14 minutes away from the numbers coming out, the non-farm payrolls, unemployment numbers, the unemployment report. Do me a favor and share this video. Just copy the link and share this with your friends, family, other traders, investors that can benefit from the live stream as well as the insights and of course the community that we have. And we'll take a look at it together. So, okay, a couple of questions on Bull, B-U-L-L. Let me take a quick look on what this is. Okay, so Webull Corporation. I actually love Webull. You'll notice that Webull is literally the platform that I'm using on a regular basis. And I think Webull has a ton of potential, very similar to Robinhood. I think it's gained a lot of popularity and it's now starting to really break out from its lows of $10, $11. It is now, already up 42, 43%. So, of course, it IPO'd, traded up to $79, $80. And then, of course, a lot of resistance here. Sitting roughly $18.50, almost at $19. So that's going to be that initial target that I could see, we will get up to. But of course, it's got a long way to go in terms of, revenues and profitability. We're looking at just under $400 million of revenue versus Robinhood that is doing over 2.9, almost 3 billion. So it's like 10 times larger in terms of revenue than compared to Webull. So Robinhood has just been on insane momentum, 154% year-to-date gains. So absolutely incredible there. And of course, super profitable, also coming in with the huge margins for the company. It's been about 25 to 30% margins for the business as well. So yeah, Bull, massive market to capture. Resistance is going to be closer to $18 for Webull. So, and then SoFi we have covered, at quite detail, at quite length. Resistance right now, 1838. That is a level that I'm watching carefully. I've got the $19 calls on SoFi. So we'll see if it actually breaks above that level. If it, takes out $19, then I'll have to roll those contracts again. If not, then I'm just planning on keeping it. Expiry is August 1st. So just over a month, a little under a month actually. So we'll see how it trades. It is overbought, right? It is overextended quite a bit.
Talk to a congressman on the Republican side of things who actually had a
So, yeah, that's where we are. Everyone, get ready. In about 12 minutes, the markets will move a little bit. I don't expect too much momentum, but maybe a little bit. They will start to reflect some of the numbers that are coming out, right? So, FedWatch tool, let's just go over to that as well. Next meeting is going to be in 27 days, accompanied with a new summary of economic projections, and the markets are very, very optimistic that this is going to be the last pause that the Federal Reserve is going to do, and then 3 consecutive rate cuts. In fact, 3 consecutive rate cuts are going to be coming in from the Federal Reserve. That's what the market's pricing in. First one in September, another one in October, another one in December, and then a pause in January, and then another one in March of 2026. And eventually the market's expecting interest rates to stabilize somewhere between 3 and 3.25% from the Federal Reserve. So we'll find out how many rate cuts the Federal Reserve is willing to do this year. Okay, so the game plan is very simple. I'm just going to reload this page, and as soon as the numbers come out, we're going to take a look at that report. We'll take a look at the chart as well, the unemployment rate, as well as the non-farm payrolls, how many jobs added, the unemployed civilians, initial jobless claims, all of that we'll take a look at together as soon as 8:30 a.m. hits on the clock. And then we'll plug those numbers in to get a better idea on the ratio of job openings to unemployed persons, and then we'll come take a look at the market's reaction to that report as well. Right now, pre-market, we are seeing stocks higher, so far so good.
Jay Powell will not be in this job, and maybe you'll have a Fed chair that's going to start lowering interest rates. And if that's the case, maybe that's offsetting whatever anxiety there would be. But then you'd probably have even more anxiety about the dollar, frankly. So how do you reconcile all of that?
Well, it's surprising to me. I mean, obviously, the bond market's moved a month or so ago, and maybe they've already factored in that this bill was going to pass. I think that the longer-term issue is, let's see what the jobs report say today. But you've got tariff policy that, in my view, is slowing the economy, and we're going to see, perhaps in this jobs report or in Q3, combined with now massive deficit spending that's going to put pressure on our interest rates. And that's the concern, that you have a slowing economy and at the same time higher interest rates. But obviously, I don't have a crystal ball in terms of what the bond market is going to do. I just think that we don't have smart economic policy right now.
Can you do you acknowledge that this bill, though, could improve the economy or help businesses, which will then improve the economy overall? I mean, permanent expensing, that's a very, that's very attractive, and it could be very good for businesses to spur investment in equipment as well as facilities.
Okay, so about 9 more minutes left. And again, for people who are joining in, again, do me a favor, share this live stream with other friends, family, traders, investors that can benefit from the insights. And of course, we're going to be live for a little bit longer after the jobs report comes out to break down any questions. And of course, we'll take a look at the market's reaction. We'll analyze things a little bit better. But then we're back to trading. It is a shorter trading day. As I said, markets will close at 1 p.m. Eastern. In observance of tomorrow's 4th of July celebrations, and all options are going to settle and expire right around 1:15, 1:30 p.m. Eastern. So non-farm payrolls set to come out in about 8 minutes. 110,000 jobs is the consensus. 4.3% is the unemployment rate expected. That is going to be a little bit of a tick higher from the previous month's reading. So we've already started to see unemployment rate has been ticking up, right? So from 3.4, 3.5, 3.6, getting up to 3.9, over to 4, 4.2, 4.1, and then now expected to go up even higher at 4.3, a level that we haven't seen since October of 2021. So it's going to be about a 4-year high for the U.S. economy, which, yes, it does sound a little bit scary. It makes for perfect headlines that the unemployment rate hits its highest level in 4 years. 4.3% ticks higher, but it is still pretty contained, right? It is still the Federal Reserve's target to be between 4.5%. So 4.3 is still not alarming, but yes, it is something to keep in mind. Because for me, the bigger indicator is going to be the civilian unemployment, right? Because that is, in my view, I think a much more important indicator is the number of people that's actually unemployed, which has been increasing by about 1.5 million over the last couple of years. It's gone from 5.7, 5.8 to now sitting well over 7.2. So if this number crosses 7.3, 7.4 million, then that, of course, is not the best sign, right? That means more and more people are losing their jobs. So happy 4th of July. Beach is waiting for me. Yeah, it's a long weekend, right? So it's going to be a great weekend over in the U.S. I remember my days when I was in the U.S. 4th of July always was a special time. Going out, doing outdoor activities, hiking, adventure, just being out in the sun, going to the beach, doing all those kinds of things, spending time with friends and family. So wish you all nothing but the best, and of course, safe and happy holidays during 4th of July. So it's always a good time. All right, so 6 more minutes until these numbers are released, and then we'll take a look at it. So 8:24 a.m. Eastern over in the U.S., and we are ready. We're almost ready for these numbers. And Oscar Health up 2.4, SoFi up 33 basis points. Nvidia's pushing up, basically flat for now, but back over 157. Microsoft, Palantir's higher, BITX closing in just under $56. Where is Bitcoin right now, by the way? Bitcoin starting to break out from this lower high and lower low pattern, and it's coming up to that resistance of 110 to as much as 112. That $2,000 range is where that area of resistance is going to be. I'd rather spend my 4th of July in Dubai, mate. Come through, open invitation. If you're in Dubai, message me and we'll go out for coffee, for dinner, drinks, whatever. Whatever you're interested in. We'll talk about the markets, we'll talk about money, we'll talk about everything, real estate, whatever you want to discuss. So if you're ever here in Dubai or Abu Dhabi or Qatar or any of these places, just let me know, and we'll definitely hang out. That's what I love to do, is meet as many people as possible, even from our community, because I get to learn so much, and that's how you grow, right? When you put yourself outside of that comfort zone, you travel, you meet new people, and you get to learn so much from them. So, all right, we are ready, almost ready here. 5 more minutes. Tell me where you're joining us from. So in the chat, just comment the city, the state, the country, where you're coming in from, so I can give you a shout out. And we're ready for 4 minutes. Is Discord blocked in Dubai? When I was there, the calls were buggy. So yeah, I mean, WhatsApp audio video and Discord audio video doesn't work. So we use Zoom or we use Google Meets if you want to connect. So that works. All right, so shout out to Spain, Texas, California, North Korea, Atlanta, Georgia. We got Canada, we got Colombia, Pittsburgh, Pennsylvania. That's amazing. Love that. I will be the first person from Seattle to see you. Perfect, Paul. Come through. Switzerland, we got Detroit in the house, Toronto, New York City, of course, Illinois. We got Poland, got Canada again, Toronto, Spain. They got South Carolina. Rini from Bucharest. Interesting. Very nice. We got Texas again, New York, Oregon, Berlin, Hong Kong, Singapore, Orlando, Seattle, Finland, Lithuania. I've never been able to pronounce that right. I'm going to try that at my own time. I don't want to butcher the name of that country. Portugal. Incredible. You got Hawaii, Ireland, Bay Area, North Pole. Then we got Iowa, Houston, Sydney. Shout out to all you guys again. Thank you so much for joining. Really appreciate it. And that's what makes this community so special, is because we're global, right? We get to learn so much from each other. We got a Moneyvest member everywhere, right? So everywhere you go, you're going to have somebody that you can connect with, right? So, perfect. North Carolina, Tanzania. Wow. Got Iran, got Texas, Tokyo, Connecticut, Tel Aviv, Washington, D.C., Riyadh. Perfect. Newcastle. Incredible. Amazing. And we've also done a lot of these surveys where I'd ask you, like, okay, what time zone you're tuning us from? Like, who is the farthest and who is the most ahead and who is the one who's delayed the most, right? In terms of time zones, right? We'll be like plus minus what time zone you're tuning in from. And that's always been interesting, because I know that markets are, especially the New York session is weird in many places, like Southeast Asia. It's super late. When I was in Bali, markets opened at 9:30 p.m., ran all the way till 4 in the morning. And the more east you go, of course, the worse it gets. In Australia, it's like midnight market opens, closes at like 6 or 7 a.m. So like you're literally missing out the entire session if you're sleeping, which obviously is important. But just finding that right balance, right time zone has also been a bit quite challenging. And that's another thing that kind of gets overlooked, right? Because if you're trading, if you're going to be investing, then it requires your attention, and you can't really be attentive if it's nighttime, because it doesn't work like that. It's very difficult. I've done it when I'm in India, like, and I'm traveling. It's very, very, very difficult for me to be like up till 2 or 3 in the morning. So earnings calls, whatever's happening after markets close, it's impossible to get that done. So yeah, I appreciate you all. Thank you so much for joining in. This is why we do it. So, okay, about 80 seconds left for the jobs report to come out. and we'll take a look at it together. And then we got the market's reaction. I got the QQQs and SPY over here. 30 more seconds, and we'll have the jobs report for us in front of us. So, hope you all are ready. Let's do this. Yeah, Mike says that sounds like a fun change of pace for someone who lives in Eastern Europe time. 2 a.m. trading. Yeah, that's crazy, isn't it? It is. All right, here we go. Markets, little to no reaction coming in. All right, so let's take a look. Okay, 147,000 jobs added in the month of June. So this was just released, 8:30 a.m. Eastern, July 3rd, 2025. 147,000 added in June. Unemployment rate changed down to 4.1%. So we're actually seeing a decline of from 4.2 to 4.1%. The market should pop on this news, seeing a little bit of that momentum higher, but we actually saw a decline in unemployment rate from 4.2 to 4.1%, with 147,000 jobs added in the month of June, which was way higher than what the consensus was at 110,000 jobs added in the month of June. So overall, very, very, very good print from the labor report here. Civilian unemployment also declining. That is also very, very good to see. So we actually saw unemployed persons go down from 7.37 to 7 million. That is a very, very good number. We actually employed 200,000 people on a net basis, on a month-over-month basis, right? So on a net basis, month-over-month, we actually had 200,000 people find jobs in the last month. So that number came down to 7.015 million. S&P is higher, 30 basis points. QQQ is up 32 basis points. SoFi up over 70 basis points. NVIDIA is rallying over 28 basis points. And then we've got Tesla also higher by almost 1% on the day. So this number went down, 7.0. What was that number? 7.015. So 0.15, and we are now back at 1.1. So this ratio went up. That is a good thing. If this ratio goes up, that is a good thing. That means we actually saw more jobs in the US that were reported at 7.77 million, and we had less unemployed persons in the US. So that number is now sitting at 1.1. That means for every one person that's unemployed, there is 1.1 jobs available in the US. So that is actually good print. That is a very, very good print on the labor market. So 36 basis points higher. QQQs, I think that's going to be a brand new all-time high on the NASDAQ 100. Yep. So that just made a new all-time high because Monday's high was 552.80 and we just crossed over 552.97. So brand new all-time high on the NASDAQ 100, and SPY is obviously made a new all-time high yesterday, is making another new all-time high today, crossing over $622. And Bitcoin just under 110,000. Crude oil sitting at over $67 per barrel. Volatility does get dropped down further, 1.6% lower so far on the day. So here we go. Pretty strong report.
34.2. That equals where we were in February. We started out the year at 34.1. The underemployment rate. So U3 is the actual unemployment rate that we pointed out. The U6 is the underemployment rate. We like to pay attention to that. Obviously, it's been coming down rather dramatically. That now stands at 7.7%. That follows 7.8%. And that would be the number that we're very close to expectations. Finally, labor force participation, always important. We want to bring back people in the workforce, and this time we did not. 62.3. We lost a tenth, 62.3. And what's very fascinating about this is these numbers have been pretty steady. 62.3 equals DEES of 22, 62.1 year and NOVA of 22. Listen, it doesn't end there. This is Thursday. Initial jobless claims coming out at 233,000. That is a drop of 4,000. It was slightly revised, 237,000. Still keeps that pretty darn good. just like JOLTS, not a bad number for the labor market. ADP seems to be an outlier at this point. And finally, continuing claims coming at 1,964,000. That means it's what, 6 consecutive readings over 1.9, basically comping to 2021. And the trade balance for May, which is obviously a deficit, at minus 71.5 billion, and the rearview mirror 60.3 billion. Boy, has that come down with all the trade issues. Just think, March was 138 billion, by far the biggest deficit since record keeping in 92. Now, after all that, what happened? Well, all you needed to see was that 147,000 in positive 2-month revision. Yield shot up like a bit of a rocket ship. 435 in a 10, we settled at 428. In a 2-year, 380, that's up 11 on the day, and both of those metrics were down 2 basis points before the number. Pre-opening Dow futures more than doubled from up a little less than 50 to now up 115. It should be no surprise that these are good numbers. And you know, Melissa Lee, you were asking, would I think that this is going to make a big difference, put July hot? I think what this does is make everyone question the dynamics of what issues are going on in the economy that would need an ease. I understand the president's view. I understand Jay Powell's view. But in the end, it certainly seems as though it's just about right now, considering what's going on with the risk on, risk off in the equity trade. Back to you.
All right. Steve, let's bring you in here. What's your outlook in terms of the impact on July, September, which was pretty much a foregone conclusion?
I think this is a very mixed report, Melissa. I have to point out, I don't even know if President Trump is going to like this report.
Why?
73,000 of the job gains were government. Now, it was -8 on the federal side, plus 40 on the state side, and I think it was plus 20 or 30 on the local side. So what you have is you have the weakest private sector growth since October of 2024. And it was bizarre to go down the table and you look at it, you see a lot of negatives, a lot of positives. It goes back and forth. I'm trying to find the diffusion index, which tells us what I don't see it here right away. It tells us the percentage of industries that were raising and lowering. You did have good job growth in the service sector, which is the opposite of what ADP thought. But private education, again, up 51, healthcare up 58, leisure and hospitality up 20. These were the same places we had job growth previously, so not much change there. But you do have to take account. What I think happened here is this anomalous hiring in the state and local government is what makes this so much higher than what the street was estimating. I think there was a feeling on the street that government would fall and the private sector would be weaker. So you would have 70 or 80 minus the federal government or minus government. Instead, it was 70 or 80 in the private sector plus. So it's a mixed report. It's good the unemployment rate fell. That's a good number right there. It's good that we're positive on job growth. I'm just not sure what's happening at the state and local level that's driven all of this employment. I would think it would be a very mixed feeling, and the Fed would say, okay, I need another month in this, especially because, as Rick pointed out, the claims number is healthy again. So I wouldn't be too concerned about that part of it.
Are you nitpicking, Steve? Are you? Because I mean, it was a good headline number. The rate was better than expected, and we had positive revisions and we've had negative revisions. I'm just wondering, if we're losing the forest from the trees here by focusing on where those ads were.
Focusing. Well, the rest of the panel will weigh in. I would say that generally focusing on the private sector is the best way to gauge the health of the economy here. I don't know. It might be that state and local is picking up jobs that were laid off from the federal government. I don't know what's happening there. But if half of your growth is from the federal government, you can't really stay back and say, oh, the job market is very strong right now. Especially because you believe that government hiring will have a lot of pressure against it. So I don't think 70,000 is nitpicking.
Okay, Steve, just pretend for a second that you could play the conversation. If Jay Powell were to call up President Trump right this second, or President Trump were to call up Jay Powell, what would they say to each other?
That we can say on TV.
I think Jay would say, "How's your golf game, Mr. President?" Or something like, I don't know. I think he'd say, "Look, this is a report that raises some questions about whether or not how soft the market is. Maybe one of our panelists has an explanation of what's happening in state and local government, but it's the lowest private sector job growth since October of 2024. I still think the job market is okay here. It's not falling off a cliff. I think unemployment rate's okay." But I just want to put that asterisk on it, which is 70,000 of the jobs were from the government side. So when you look at the health of the economy and hiring, you'd say, I don't know. There's some questions out there, and I'd just be a little circumspect. I wouldn't cut rates right away, but I'd have my finger near the trigger.
All right. Steve, stay with us. Let's bring in the rest of our jobs panel. The Brookings Institution's Wendy Edelberg, the Manhattan Institute's Allison Schrager, and our own Mike Santoli. Great to have you all with us. Wendy, let's start off with you. What's your take on the report? What's your take on that asterisk that Steve brings up in terms of the growth from the federal government in terms of job ads?
Yeah, Steve makes a great point to focus on the private sector. The main challenge here, and I think the main challenge for Jay Powell, is what's a good number? And right now, it is completely perplexing to be able to answer that question. And the reason is immigration. It looks like the recent surges in immigration in 2023, 2024 are actually still putting upward pressure on labor supply all these months later, even after it slowed in the second half of 24. And then immigration clearly slowed in the first months of the Trump administration. And yet we have a lot of information that shows us that immigrants who came since, let's say, 2022 are just now working to enter the labor force. And to the degree that they're doing that at speed, in the second half of this year. We are just in the grip of this change because of the wild swings in immigration.
Allison, do you also believe that we are on the precipice of a major change here in the labor market?
Could be, but I think I feel like we keep looking for the shoe to drop, but we keep getting good reports. It's not just this employment report. It was also JOLTS. It's also inflation. And for right now, the economy looks pretty strong. It's still keeping on, despite all this uncertainty, despite all this tariffs. I guess we can't explain it, but at the very least, I don't see how the Fed could justify cutting rates right now. I mean, not only that, it doesn't even seem the high rates where we are. We're supposed to be still in a high rate environment to finish off inflation. It doesn't seem to be having a contractionary effect on the economy. So it even is sort of suggesting that the neutral rate is much higher than it was pre-pandemic. And it's really hard to...
All right, everyone. So overall, I think the jobs report was pretty good. Yes, there's a good point to be made that a lot of those jobs came actually from state and local government. Private payrolls are still struggling, but I think this is a trend that we're going to continue to see over the coming months and even years because, Microsoft announced a 9,000 person layoff. There's a lot of big tech companies that will continue to announce a lot of mass layoffs here because of the rise of artificial intelligence. I think this is going to be an ongoing trend where more and more private positions, private jobs, especially in the engineering, software, services sector, where we're going to see, as unfortunate as it is, a little bit of that replacement from people to agentic and robotics and artificial intelligence. I think that's going to be an ongoing trend. And, that was one of the reasons why I mentioned my yesterday's update that there is a possibility that we do see, a very fascinating dynamic in the market where unemployment is high and yet economy continues to expand and grow at a very strong rate because companies can be more productive, they can be more efficient with artificial intelligence that can work around the clock, that does not take any breaks, and that can continue to be more efficient over time and as it gathers more data points. So I think that's a trend that is possible in an economy which is going to enter into this new era of artificial intelligence. Now, that being said, I think I do agree with the Federal Reserve's absolutely no need to cut rates at this moment. The reason being is because there's nothing to fix. As I mentioned this before many times in the past, that if unemployment is low enough and inflation is also close to the Fed's target, it's been trending lower. If the Federal Reserve tries to poke the bear, where they start cutting interest rates, what are they really doing is not fixing the labor market, because it doesn't need fixing. Right now, unemployment's pretty strong. You got 4.1%. It actually ticked lower. It was beating expectations on all accounts. 147,000 jobs added, 4.1%. Then we got private payrolls increasing 74. Month over month, manufacturing was down. So manufacturing payrolls down about 7,000. And 62.3% was the participation rate, with a 3.7% increase in average hourly earnings. I think it's sitting at just over $30-something, $32 or something and some change in average hourly earnings. Let me just pull it up here very quickly. I was reading that earlier. Let's see. Yeah, so government employment rose 73,000 in the month of June. Employment in state government increased by over 47,000, largely in education. And then we got healthcare adding 39,000 jobs in the month of June as well. And there you go. Average hourly earnings increasing by 8 cents or 0.2% to $36.30 in the month of June. And over the last 12 months, it's up over 3.7% at the moment, which is just over $36.30 is where we're at on an average hourly earnings basis. So overall, the Federal Reserve's cutting interest rates by 3 times this year. I think the market's a bit more optimistic right now on those. So we'll see if, what kind of read that's going to be for the Federal Reserve. But overall, I think this was a very, very good report. This is going to be the portfolio right now. I've got BITX shares that I picked up yesterday. Then HIMS puts I'm going to be closing out today. I've got the TSLL puts that I'll also be closing out today as well. Other than that, I'm just holding and trading some of these other positions. So that's all for today, everyone. Thank you so much for joining. I'm going to spend time in our Discord now over the next couple hours, sending out alerts, updates, answering all questions there. And again, if you want to join, be a part of our MoneyVest community, we've got the 4th of July sale going on for 2 more days, today and tomorrow. It's going to be available. 40% off is going to be on all annual memberships, and 50% off is going to be on courses. And if you want to jump on a quick Zoom call with me, if you want to just do a Zoom call with me, for if you have any questions and you want me to answer any questions for you, email me at admin@moneyvest.com and we'll jump on a Zoom call. I can answer all questions, because my main goal is to help you in your journey of your investing and trading, and of course give you access to all the education and of course learning material, as well as our Discord community as well. So again, 2 more days left. If you're interested in joining, link is going to be up pinned on the chat. You're more than welcome to join us, and all this portfolio updates and trade alerts will be shared on our Discord as well. So thank you so much for joining, everyone. Happy Thursday. Tomorrow is the market's 4th of July celebration, so we're going to be closed. Today, markets close at 1 p.m. Eastern, so shorter trading day. Have a great long weekend, and I will see you all